Well, hello everyone, and welcome to today's lecture on Chinese corporate bad actors in the U.S. and European capital markets, brought to you by the Prague Security Studies Institute. We're very happy that you could all join us today, and we'd really like to thank all of you for being here. We'd especially like to thank the U.S. Embassy in Prague for making today's lecture possible in the first place through their financial support. My name is Zach Kramer. I'm a research fellow here at PSSI's Economic and Financial Threat Program. It's my pleasure to introduce today's speaker, Roger W. Robinson, Jr. First, just a few words about PSSI. The Prague Security Studies Institute seeks to illuminate select unconventional threats emanating from authoritarian governments that challenge the transatlantic alliance, including NATO countries like the Czech Republic, and other partners globally, especially in the economic and financial and space security domains. PSSI is dedicated to the education and training of new generations of security-minded students and young professionals, including through its programmatic activities and growing academic network in the Czech Republic and abroad. So today's speaker is Roger W. Robinson, Jr. He is the chairman and co-founder of the Prague Security Studies Institute, which was established in early 2002. Mr. Robinson began his career as a vice president in the International Department of the Chase Manhattan Bank in New York City, with responsibility for Chase's lending activities in the Soviet Union, Central and Eastern Europe, and Yugoslavia for 5 years. He also served as a personal assistant to then Chase chairman David Rockefeller for some 33 more years. In early 1982, Mr. Robinson was appointed Senior Director of International Economic Affairs at the White House National Security Council under President Reagan, where, according to President Reagan, he was the architect of the secret economic and financial strategy to hasten the demise of the Soviet Union. He later served as chairman of the Congressional U.S.-China Economic and Security Review Commission in the early 2000s for the bulk of his 5-year term. Mr. Robinson has concentrated on the nexus of national security and global finance for nearly 45 years and is one of the world's foremost experts in countering the economic and financial warfare activities of China and Russia. Mr. Robinson was also the first to publicly surface extensive research on the subject of today's talk on the national security and human rights dimensions of China's presence in the U.S. and Western capital markets, or U.S. and European capital markets, pardon me. It is my great hope that you'll find today's topic as stimulating and as much a cause for concern as we do here at PSSI. We'll have a question and answer session after the lecture, but feel free to write your questions in the Q&A window in the Zoom software at any time during the lecture, and we'll address them afterwards. Thank you very much. I hope you enjoy the lecture. Roger, please, the floor is yours.
How are we doing? Can you hear me? My apologies. I want to thank Zach and my colleagues at PSSI for helping pull together today's event. I think you'll find it at least original, if not thought-provoking, in the sense that there's not much out there on the topic at hand. I would just say that the fact that that the whole issue of funding and the financial dimensions of the U.S.-China relationship have seen very little attention, particularly vis-a-vis the national security, human rights, and investor protection dimensions. And that's really the three pillars of our focus here. There are hundreds of millions of individuals around the world, retail investors, both US, Europe, Asia, elsewhere, who are holding the stocks and bonds, the so-called securities of Chinese corporate, what one could call bad actors. These are US and allied sanctioned companies, but also those that have known track records of national security and human rights abuses. Amazingly, over more than 20 years, China has had unfettered access to the US capital markets, for example. There's never been any kind of screening or diligence performed in the national security human rights arena, even by US regulators such as the Securities and Exchange Commission, the Department of the Treasury, and others. We have such screening, for example, for Chinese investment in the United States, as you know, from the Committee on Foreign Investment in the US. And Europe has equivalents now in that category in the way of trying to keep a handle on national security oriented or relevant acquisitions by China. No such kind of discipline has ever shown itself vis-a-vis the capital markets. Now, we're talking about over the past 20 years, China alone has attracted trillions of dollars, as in trillions with a T, from largely unwitting US retail investors, as many as, say, 150 million. So it's a very widespread kind of event here. There is an array of companies that have shown themselves to be in the portfolios of almost half of the American population. These are companies that, as I said, have in many times already been sanctioned by the United States for national security human rights abuses. They are folks that have engaged in IP theft, building and militarizing illegal islands in the South China Sea. They are folks that have been engaged, companies that have been enabling genocide against the Uyghurs and other religious minorities in Xinjiang. They are companies that have engaged in helping equip China's surveillance state and its credit scoring system, other means by which China controls and frankly oppresses the Chinese people. So when I'm referring to the Chinese here, I'm only referring to the Chinese Communist Party. We're very sympathetic with the plight of the Chinese people. There's no design here to impugn them whatsoever. If anything, we're trying to assist their bid for freedom. And we certainly don't want any Asian Americans or Asian of any descent to be thrown into this kind of feeling that this is in some way an anti-China lecture or subject matter. Far from the case. We're talking about a prudent, disciplined approach to this subject matter so that we can ensure that we are protecting ourselves from a security perspective, that we are acting consonant with our fundamental values as transatlantic allies, and that we are doing something to protect tens, if not scores of millions of unwitting retail investors in our various countries that are taking what you might think of as an asymmetric material risk by their investments in these companies. A lot of the time, as you might imagine, when I talk about unwitting, Americans have, and Europeans too, have very little idea as to what's in their pension plans, what companies are in their investment portfolios, what's in the index funds, the so-called passive investment vehicles where the majority of investment takes place today. It's not choosing like the old days, stock by stock. Folks are buying indices that have a whole range of companies, hundreds if not more in them. And you're buying a nice spread across a spectrum of, say, emerging markets, China being the dominant one. And the problem is that these are not all benign commercial entities. You have companies there that as I said, have track records in environmental degradations, weapons proliferation. They're advanced weapons manufacturers. I don't think that any of us as investors have necessarily signed on to the use of our hard-earned retirement and investment dollars to help fund concentration camps in Xinjiang or to in any way endanger our men and women in uniform by unwittingly funding PLA, People's Liberation Army affiliated companies, contractors, and as I say, the advanced weapons manufacturers themselves, including ICBMs targeting their families. This is not what the American people, I believe, signed up to. And frankly, there is a dearth of diligence here that should have been performed, and in my view, didn't happen. Uh, and also on the regulatory front, both here and in Europe. Take this example. I think it's true that not one of the Chinese companies, and there are over 1,000 in our markets, largely through index funds, which are funds that are built around these indices, like BlackRock, Vanguard, State Street, other well-known fund managers, asset managers who are thriving with these index funds. But again, the problem being that nobody took a hard look, including MSCI, FTSE Russell, Bloomberg Barclays, Dow S&P, the big index providers in the United States, never really paid much attention to these kind of material risks, such as national security and human rights abusers. And to give you a sense on the investor protection side, the third leg of the stool, so to speak, not one Chinese company is today compliant with US federal securities laws. I'll say that again to let that sink in for just a moment. Not one is compliant. For example, after the Enron debacle in the early 2000s, the United States realized that you really can't necessarily trust all of the auditing firms, the private sector auditing firms, because they gave Enron and others a clean bill of health. And the United States passed a law called Sarbanes-Oxley that created a new entity in the federal government called the Public Company Accounting Oversight Board. That's a design to audit the auditors, so to speak, and make sure that the American people have that next layer of protection at an official level. China has steadfastly refused to submit to PCAOB audits, as they're called, and that means that they're non-compliant with Sarbanes-Oxley. They don't release any of their corporate financials. They judge those to be state secrets and have made very plain that they're not interested in revealing those. Well, it begs the question, how do you perform diligence? How do you go through the discipline as a prospective investor to understand what kind of black box are you dealing with here? Are those companies been sanctioned in the past? Are they somehow engaged in egregious human rights abuses? I think we'd all want to know that. Increasingly, values-based investing, what some call socially responsible investing, is still on an upward trajectory. I think that people want to know where their money's going and how it's used. They're not interested in funding intellectual property theft or environmental despoilage. They're not interested, certainly, as I say, in undermining our common security interests and fundamental values. So that is the root of the problem. So this is not an across-the-board prohibition we're talking about here on Chinese companies. They are the second largest economy in the world. Folks are going to want to hold their benign commercial companies in portfolio and take advantage of the growth and the diversification, particularly in the emerging markets. But then again, you have to differentiate what companies are we talking about here, and how is it consistent to be sanctioning them on the one hand and funding and investing in them and giving them all the prestige of being, in the case of the US capital markets, the deepest and most voluminous markets in the world, which they take to the bank reputationally every day. Why are they prospering that way? Where did the free lunch program come from? And that's what we're trying to get to. We're talking about trillions of dollars of funds under management. I've seen estimates of 1.2 to 1.9 trillion of American people's investment in the equity or stock side alone, not to mention also big numbers on the bond side, most of it dollar denominated. So again, we're talking about big numbers here. This is not tens of billions or even hundreds of billions of dollars in problems. And so we have to be very alert to it. We have never really had an opportunity to talk to this issue in Europe. This is the first time for PSSI to venture out and try to provide some chronology and some background on how this capital markets threat issue has emerged in the United States. What are the milestones that have taken place? And I can recount some of them quickly for you. But this issue really hasn't seen the light of day in Europe. And that's of concern too, particularly with the EU-China deal racing up the pike with in principle agreements document already having been surfaced. It's a real concern. So we thought we would take a look at the Frankfurt Stock Exchange as a kind of example for Europe and see what do we find in terms of what might be called Chinese bad actors. I think a reputation that's been earned by the open source research that we've conducted on those companies. Again, these aren't opinions, they're empirical facts that are backstopped and footnoted pretty carefully. What we found was that, not surprisingly, Europe has some of the same glaring gaps in understanding as the United States. For example, you have on the Frankfurt Exchange, in terms of primary listings, at least 7 what we've identified as Chinese corporate bad actors. When you include direct subsidiaries and affiliates, that number balloons out to 68. And most of them, I think, it's fair to say, would be in index funds of the type that I've described. The MSCI and FTSE Russell and so forth are big in Europe, just as they are in the United States and others. That's where, again, the dearth of diligence is come back to haunt some of these funds that have built funds, as I say, or benchmarked around these indices, which is the term of art. So that's one example of where we sit vis-a-vis the Frankfurt Exchange. You have various gradations, in Europe as you do in the United States. There's an open market that's less disciplined than, for example, Börse Frankfurt or Extra, both of which are stock exchange venues in Germany. And anytime we see a more lax regulatory regime, big surprise, that's where the Chinese often migrate, and as do the Russians. I mean, Russia is a player here. For example, it has about 25 companies in the US capital markets. 8 are sanctioned by the United States. And yet they're in most of the portfolios of the 50 states and the state, what we call public employee retirement systems, the pension funds of the 50 states. They are in the indices as well, in the index funds, the Spare banks, the Gazproms and Novatech and several others. So it's not just a subject that is of concern vis-a-vis China. Russia is a much more reduced event, as you might imagine. You're comparing 25 companies to over 1,000. That gives you orders of magnitude, hence why we're concentrating this discussion on China. And we can talk perhaps in the Q&A section about some of examples. We provide profiles, risk profiles, as we call them, of 4 of the companies that are primary listed in Frankfurt, and we tell that story. And frankly, it's a disquieting story. In the case of AVIC, which is an aviation company, they've been sanctioned 5 times by the United States in the past. I mean, they are a military contractor. They are in the business of building advanced weapon systems. including submarines and submarine-launched ballistic missiles. So, in other words, these companies are not benign. And again, I think it matters. I mean, I've been in finance a long time. I mean, I started as a Wall Street career, as you may have heard. And I don't know how you can set aside due diligence in such a manner, because again, I'm not just approaching this from a moral compass point of view or a security-minded point of view, although my career has been in the national security field. This is very much, as I said, it's an investor protection concern, and it's a very prominent risk concern. That is material risk, as our Securities and Exchange calls it. Information that should be publicly disclosed to prospective investors so that they can make a more informed and intelligent set of investment decisions. That's what the SEC is designed to do. And yet, I would have to argue that they've fallen down on the job in a disturbing way, and that's got to be fixed. For example, US sanctioned companies in the national security and human rights arena are not regarded as material risks to investors by the Securities and Exchange Commission today. There's no obligation to disclose if you're sanctioned. There's no, I mean, this should be in the risk section very prominently, but there are gaps. And folks aren't describing their aiding and abetting of genocide very enthusiastically on the part of China or the Chinese companies involved, or those investment banks in the United States and perhaps elsewhere that are bringing them to market, whether it be an IPO or a dollar-denominated bond offering or something along these lines. So in a way, we're not trying to do anything too radical here. We're trying to look at this in a balanced fashion, best we can. But for goodness sake, you know, these are pretty glaring problems that require a remedy. We have some very specific ideas as to what can be done. In the case of the United States, for example, some measures have already been taken legislatively. Others have been taken by the executive branch in the form of presidential executive orders. In fact, it might be a good time just to briefly mention what some of the, if you will, progress looks like in the United States. Our capital markets are roughly the size of the rest of the world combined. We have well over 60%, probably more like 2/3 of the world's investable capital in the United States and liquidity. We possess the world's reserve currency in the dollar. That's a big difference than a non-convertible currency in China. And the fact that they have a real vulnerability on the large scale volume of dollar financing that they require annually to remain a prosperous, stable country. The Chinese Communist Party is very alert to the fact that the US capital markets are essential in this regard, again, because of the depth and the volume and the expertise surrounding our markets. I think it's fair to say are second to none. And it's not a matter of the Chinese going elsewhere and just in a more permissive environment. Frankfurt, London, Hong Kong. I mean, they certainly migrated to Hong Kong, but let's think about it. How's Hong Kong doing these days? As freedoms are rolled up seemingly on a daily basis, where the integrity of the legislature has been undermined, where the legal system itself and its source of being a reliable place for arbitration for investment banks and others, that too is on the skids. So China, ironically, is going after what is kind of a golden goose, which is the fact that Hong Kong is a very well developed financial hub, and they can attract dollars and in large volumes, and they don't, even if they're delisted from the United States, they can go to Hong Kong, relist, And in fact, U.S. investors are buying and into Chinese companies that are attracted right out of or selected right out of the Shenzhen, Shanghai, Hong Kong markets. They go into the indices, then they go into index funds, and they disappear they go into the US capital markets by what I call an unguarded and unvetted backdoor, unregulated backdoor. Are there PCAOB audits? No. Are there disclosure of financials? No. Is there any consideration as to whether they're sanctioned, actively sanctioned by the United States for national security and human rights abuses? No. I mean, that's extraordinary. Do they engage in the disclosure of material risks? No. For the most part, no. And that is the root of the problem. Now, the previous administration, US, just barely stopped, for example, the federal thrift savings plan, which is the retirement plan for 6 million federal employees of the US government and all of our military, incidentally, from a shift in the international fund of the so-called thrift savings plan, TSP, that was going to move to the MSCI All Country World ex-US index, a hugely popular benchmark index. Well, there's a problem because there are a number of Chinese companies there that are on the Commerce Department entity list, which is a sanctions list. They can't avail themselves of US equipment, components, technology, or services. Why? Because they're seen as a national security threat, or they have been designated as human rights abusers formally by the American government. And so they're out. And yet they're in MSCI. They're in that index that was going to make sure that the bulk of those 6 million American employees of our own federal government are holding companies whose activities contravene what they might have spent a lifetime doing. What about the champions of human rights? I mean, you know, how does Nancy Pelosi and other members of Congress who are in the TSP feel about their money being implicated in enabling genocide? I would suspect not very well. This is not, it's an education issue. Well, and that's why we're here. It's just illuminating the facts of the case. And that's really what we're just trying to do here. This is not trying to gratuitously cast aspersions on China, although we're acknowledging the threat is growing. And it is the principal existential threat to the United States. That's just a fact. Whether you're a Democrat or a Republican, that is an established fact. It's not Russia, it's China. So that's not to say, you know, wholesale condemnation, that we can't do business with them and so forth. There's a lot of effort to find common ground and hopefully build a more peaceful world. We're not opposed to looking for common ground. It's just that this is out of balance. This is egregious. This is not on. And the thing about it is you don't find an issue every day, and I'm speaking of the United States for a moment here, where scores of millions of Americans are implicated in this very problem with their money. This is not an abstraction. This is not like I'm talking about your opinion versus mine on, say, space-based missile defense. Is that a good thing? Does it lead to an arms race? And we may have different views on this kind of thing. Is it? But those are opinions. Finance is a different game. This is empirical facts. And that's why it's so difficult, because it's provable. Not to mention what the classified world could tell us about some of these companies that we're not necessarily finding in the open source. It's not pretty. Now, besides the president stopping MSCI, All Country World ex-US, from being made part or the benchmark for the International Fund of the Thrift Savings Plan, that didn't happen. That was stopped by the President of the United States. And in fact, I think it's going to be codified on a bipartisan basis by the Congress. Look at the matter of PCAOB audits that we talked about. There too, legislation was unanimously passed in the Senate and House of the United States called the Holding Foreign Companies Accountable Act. It says that if after 3 years the Chinese don't, one, have PCAOB audits, and two, they have to basically prove that they're not owned and controlled by the state. That's what the legislation basically says. And it passed unanimously. So this is not a knuckle-dragging Republican event. This is a bipartisan event with strong, I think, support and real concern about investor protection. So the SEC got that wake-up call, and it's starting to implement what today is a law. It was signed by the president. This is not, again, an executive order. This is the law of the land. So that was another one that went down. There was a presidential working group on financial markets that looked at this in the last administration. But most importantly, there was an executive order called 13959 that has the effect. There's also, I should say, something called what I call affectionately the Pentagon PLA list, but it's basically called, technically, the Communist Chinese Military Company list. The Congress ordered the Pentagon by law to produce a list, I think each year, that is compiled on the basis of Chinese companies affiliated with the People's Liberation Army and the Chinese military, so that everybody would have their eyes open. Well, what Executive Order 13959 did is it has capital market sanctions that are applying to any Chinese companies on that list. First ones in history of the US. So this shows you how new this really is. Now, what does that mean, cap market sanctions? Well, in this context, it means you're not permitted to hold the stocks and bonds. No US person worldwide is permitted to hold the stocks and bonds of companies appearing on that list effective November 11th, 2021. Now that means no Shenzhen, Shanghai, no index funds, no mutual funds, no indices. The back door that I talked about of passive investment is bricked shut. And the subsidiaries of those 44 companies on the list are going to be included as well. And that's at least 140, 150 companies, probably more. And they will be subject to cap market sanctions as well. There's legislation that's looking to do the same for the 300 Chinese companies on the entity list, which is, again, the more export control oriented list. Why? Because of the glaring disparity between export controls on the one hand and a free lunch program on being funded and invested in on the other. I mean, how does that work? How do we get that consistency? It's not there now. So I think that although I think a number of you will have some questions, and I wanted to expand the Q&A period a little bit. I think that that's a better way to go than prattling on. So how about if I'll stop at this juncture and be delighted to take questions. I will say one thing before I sign off of the former lecture here. We are putting out a paper, a report today out of PSSI that is called the national security and human rights dimensions of Chinese corporate bad actors in the U.S. capital markets. I think that's the title that we finally arrived at. But it is I think you'll find it interesting in the sense that it has tables on some of these Chinese companies which are named. And I think that you can get your sense yourself as to whether you would be comfortable investing in some of the companies that are profiled there. So with that, I'll turn it back over to Zach. Thank you.
Excellent. Thank you very much, Roger. I would like to reiterate how excited we are about our Frankfurt Stock Exchange report. I think that might have helped to, given that this is a largely European audience, might help to sort of connect this a little closer to home for many of you. We will be planning on sending that out to those of you who registered for this lecture in the days ahead here. We have quite a few questions coming in already. It seems that there's been, I don't know, a lot of interest in this so far, so that's great. I think it's a good idea that we left quite a bit of time open here for the Q&A. One thing I'd like to say before we get into those questions is that we will be sending out a poll as well. It's an anonymous multiple choice poll, very brief, to all of you here in this lecture in the second half, just asking a few questions about your experience today and sort of what you made of this introduction to the topic and so on. So we'd greatly appreciate it if you could all fill that out as well. I hope that won't distract you too much from the remaining discussion here today. So we've got, well, thank you all very much for all of these questions. We'll try to get to these as many of these as we can. I think one big one that sort of ties a lot of these together is why should Europe care about all of this? And what should Europeans do, particularly those that live in countries that don't have big capital markets, that maybe see themselves as not having much of a connection to this issue area, like the Czech Republic, like Slovakia. I mean, we've talked about the Frankfurt Stock Exchange. You could talk about Milan or London, but not all countries have exchanges like this. So maybe what should people in these smaller European Union countries that are concerned about these threats consider doing, or what actions could they take?
Well, as I mentioned, I think that Europe is afflicted with many of the same difficulties, albeit on a somewhat smaller scale than the United States. The index funds that are problematic because of the indices in which they benchmarked against are also in Europe, and they're in the Frankfurt Exchange, London, Milan, Paris, at all. And so when we're talking about Chinese companies of the wrong sort ending up in these funds, that is common between our two sides on the Atlantic, of the Atlantic, I should say. And it's also a matter of the upcoming EU-China agreement. I was remiss in not talking to that issue, but it might be relevant here. Why should Europe care? Because when we looked over the 7 or whatever page in principle agreement, we found some curious and kind of suspicious language there, which under the discrimination section, a term that the Chinese really glom onto and enjoy, there was a statement that there would be no permitted investment bans by Europe on Chinese companies. It would prohibit investment bans. Well, in the United States, capital market sanctions have been frequently referred to as investment bans. And the Chinese knew in December that this issue was rolling down the pike. And I don't think it's a stretch to say that they were alert to, when they were trying to stampede the EU into getting an agreement as quickly as possible after languishing for 7 years before, that one of their motives was to ensure that they're not going to be facing cap market sanctions of any kind, or restrictions or exclusions on the basis of some of the more colorful dimensions of these companies. And I think that that's of great concern, because when Europe starts to sign off on the ability to intercede, then you're in the aiding and abetting of genocide business in all likelihood. And that's not, again, some polemic. That's not just some alarmist or exaggerated concern. I think that can be proved. So there are going to be, in my opinion, the necessity that certain Chinese companies really don't have a place in the portfolios of the European people. I mean, that's what it gets down to. I think that if you talk to human rights champions and they figure out that they are unwittingly themselves, much less the people they care about, are funding some of the most egregious human rights abuses, they're not going to be amused. And they're going to be looking at European governments. They're going to be looking at European regulators. They're going to be looking at the Wall Street equivalents, fund managers, asset managers, compliance departments, diligence and risk management departments, and of major companies on the exchanges. And they're going to wonder, wait a minute, how did this happen? You know, why are these companies in like Hikvision in my portfolio? And so I think that's coming. And when it does arrive, in my opinion, and I think it will, it's going to matter quite a lot to Europe. And I think that some of the remedies, not all, will be similar to the United States, because I think it's going to prove to be intolerable at a political level. And the reputational damage that could result from these kind of revelations, as we say in America, aren't pretty. So that would be my answer.
Thank you very much, Roger. I guess we could also add that it's going to be very much a two-level issue in Europe, both at the European Union and the national level. So maybe a country like the Czech Republic still has a very important role to play through things like the European Parliament and so on, in dealing with things like this EU-China agreement.
It's an educational function. It's an awareness raising function. And it doesn't matter the size of your country. Either you're going to be alert to what is very much a 21st century, somewhat sophisticated, perhaps arcane new threat that lots of people haven't thought about. There's not a lot of skill mixes out there of global finance and national security and human rights. The twain doesn't usually meet for those disciplines, but they need to. And unfortunately, so much of the malevolent activity of China and Russia is in the economic and financial domain. Where do we think it is day to day? It's not military forays. They happen once in a while, witness 2014, but that's not a day-to-day problem. Cyber is more of a day-to-day problem, to be sure. But look at this. This is cap markets every day. And so do people wake up and smell the coffee here? I think it's a matter of time. And I think the Czech Republic and other states can really help raise the concern to a level that will require action.
Excellent. Okay, we have another question from Salami Baitumir here, asking basically about there's this sort of new aspiration or ambition in Europe of sort of establishing their strategic autonomy from the United States and just from really anybody else, the independence of the European Union as an international actor. And some people might say that has been kind of a motivation for them to get on closer terms with China at a time when U.S.-China relations are increasingly tense. How do you think that factors into the U.S. effort to convince their European partners to apply restrictions to keep Chinese military organizations and others out of European capital markets? Question asks, and I would caution you here. These are continuing to roll in, so if we're going to get to all or even most of these questions, I guess we do have to be.
I'll try to be.
Okay. All right. Excellent.
Try to be briefer, and I apologize. I would just say that anytime the U.S. is seeking to impose its will on Europe, extraterritorially or just in terms of some heavy-handed advice or pressure of one form or another, Europe tends to recoil. That's what the history says. So I do think that it's Europe deciding itself what is prudent, what is sensible, what protects investors there, what protects their security and their fundamental values. They are with such values, that's for sure. And the European population may not be as pragmatic, shall we say, as the EU and other European institutions and governments. I mean, governments could kind of blow this off a little bit, like Wall Street is continuing to do, I might add, but they're running into more of a buzzsaw than they had in mind. And I think the same could be true in Europe. So I think it's left to their own conscience and their own sense of what would be a proper measured response. But at the same time, what are you going to do? I mean, if you do nothing, then you're basically saying, well, let's just protect the fees of the equivalent of Wall Street players, you know, fund managers, asset managers, index providers. You know, they're making good money. Let's let them worry about let's let them preserve those fees. Let's have a better relationship with Beijing and not poke them with this. Let's not have any kind of estrangement with China. And that could be your priority. But where does that leave European investors and national security and human rights? Is that a secondary concern now to fees of some very well-heeled fund managers and asset managers? I don't think so. So I tend to think that the arguments will sort themselves out.
I would agree. I think if we can say that it really redounds to a matter of values, then it's not something that should, I don't know, kind of come and go with the changing, I don't know, political stances in Europe and so on. These should be pretty irreducible fixed positions that the European Union countries and the United States share. Okay. Another question from Mr. Yaroslav Kalvoda, who gives us some nice context for his question here. This one is shifting the focus to the United States again. So General Paul Nakasone, director of the National Security Agency and head of the United States Cyber Command, talked about 3 priorities at the RSA conference in San Francisco in March 2019: the theft of intellectual property, Chinese investments, and Russian activity in the United States. And I don't know much about this conference specifically, but basically that these were priorities of the United States during the Trump administration. He goes on to say that, I was afraid that America's position would be weakened after the election, but now after President Biden's statement to President Putin, and after the meeting of Antony Blinken and Jake Sullivan with Wang Yi in Anchorage, it seems that the Biden administration will be, on the contrary, quite stricter. Do you read the current situation in the U.S. the same way?
Yes, I think generally speaking, I do. I'm more optimistic about the Biden administration. They have not moved reflexively to rescind the executive order 13959, for example. They have not tried to negate the use of capital market sanctions, which is arguably the area of China's greatest vulnerability and one of America's greatest strengths, namely our dominant role in the economic and financial domain. So I think they are interested in preserving that leverage, and so far so good. And I think that is a welcome surprise in a way. It's easy to see something with a Trump name on it and in effect push back somewhat against that. But that has not been the case here. It's been a very hotly debated, very intense interagency process with lots of blood on the floor, if I may say. This was a very contentious among Treasury Department, NSC, State, Pentagon, Commerce, In other words, this really went through the ringer over a 7-week period at the presidential and cabinet level. Let's see here. Let's see if I can get rid of that. So that tells me that just like Tony Blinken at State didn't walk back Mike Pompeo's genocide designation to describe the horrific atrocities of China in Xinjiang. That's another example. So I do think that the Biden administration understands that if you kind of roll this one back, I don't know, it gets pretty tricky. I mean, look at the southern border. It hasn't gone perfectly. So you don't want to go reflexive in just saying if it's Trump, it's automatically bad. I'm not, by the way, I'm not arguing. This is not an argument for the Trump administration per se, or offering guidance there. It's just to say that these issues are grounded in substance. And so far, I think the Biden administration is responding well to this new challenge to the U.S. So that would be my
answer. That reiteration of the genocide designation really certainly told us a lot, I think. Okay, we have another question from Danila Naumov, one of my dear students. Thank you for the question, Danila. He's asking about your having mentioned that certain members of the U.S. Senate may have certain material connections to the companies that are responsible for the violation of human rights in China and national security interests in the U.S. He notes that this does indeed seem like a major hypocrisy for the people that are responsible for passing this legislation, protecting the interests of U.S. citizens to have such conflicts of interest. Do you think that this has happened volitionally, intentionally, or out of perhaps just an ignorance of these Senate members who, like many other Americans, are unwitting investors in these index funds and other assets that do contain these Chinese securities that are so problematic?
I tend to think it's the latter. I mean, this is the first lecture. I mean, the folks listening can make the judgment, but I will hazard a guess that this is the first time you've heard a lecture on this subject from any NGO. And you haven't heard from this within government either, or from the regulator community. So this is still a rather nascent issue. Obviously, it has a track record in the United States, but I think that folks are still trying to get their arms around this. It's an immense new front in the U.S.-China competition that, again, has not seen the light of day in over 20 years, even at cocktail parties, much less in officialdom. So folks, again, are going to try to, I think, gradually adjust to the notion of this unwitting funding of malevolent Chinese companies and those that are, in effect, directed by the state. Remember, Chinese companies all sign on to Article 7 of the National Intelligence Law, which requires the weaponization, if you will, of Chinese companies at the behest of the Chinese Communist Party at any time they deem indicated. That can be for espionage and other purposes. That's not a secret. I mean, that's what it says in public explanations. The same is true with Communist Party cells or representatives of the Communist Party that have now been embedded in the senior managements of virtually every Chinese company, both their so-called private, quasi-private sector, as well as the state-controlled entities. There's a re-centralization going on that's unwise in the extreme, but here we are. So, you know, President Xi is sowing mistrust, wittingly or unwittingly, on the part of Western interlocutors here. So these are all considerations.
Thank you very much. We've got, I guess, about 5 more minutes here, so we'll see if we can get through 1 or 2 more of these questions. I don't think we're going to be able to get to them all today, but guess that's a good sign that everybody's interested.
We have there's demand.
Certainly. So we have a question from Miss Veronica Valdova asking about the security impact of financial activities on the Chinese market by Czech or other European firms, about whether or not these are really such a concern. I mean, we've gone through this about the issues associated with Chinese companies coming into Western capital markets, but she's specifically asking about the recently deceased Czech businessman Petr Kellner, who was famous or notorious for his business activity in China and Russia. Do you think that these things are also security issues along the same lines as the?
I do. I do. They are quite different in many regards, but they have certain commonalities. And I would say in the case of home credit, for example, that was going to be a sporty enterprise. I mean, this gets down to enhancing control by the Communist Party. It goes into social scoring. I think it goes into perhaps very colorful figures in China that are running some of these investments. I think you have to be very careful for some of the reasons I mentioned that are systemic to China, whereby the Communist Party really has its hand in so much now under President Xi, quite different than the past. I mean, and not for the good. So unfortunately, it's becoming a bit more radioactive, I think. It's not to say that, it shouldn't happen. I'm not making any across the board statements here. But I will tell you this, it requires a very granular diligence to understand precisely what you're getting into. That's all the advice I would offer.
Yeah, I think that makes sense, that it's getting more and more difficult to maintain that arm's length relationship for companies in the West that are exporting to China and so on without getting involved in power structures there. Okay, we'll take another question from Mr. Tom Dybel, I believe here. He's asking about a specific case that I for one am not familiar with, involving the American Bondholder Foundation, and I guess it's a holder of some Chinese sovereign debt. But I guess this may be a good opportunity. We've talked quite a bit about equity markets here, but capital markets, of course, also involve debt securities. What are the kind of specific security issues or problematic mechanisms associated with the debt market rather than stock markets?
Yeah, I think
maybe
that
specifically, do you have any thoughts or concerns about Western investment in Chinese sovereign bonds and not necessarily just corporate bonds?
Yes, the American Bondholders Foundation, as I understand, is trying to get justice for Americans on defaulted sovereign debt that's pre-World War II, pre-1937 debt. It may seem like a long time ago, but the Tsarist bonds were settled. Brazil had even older bonds, as did the UK. So it's not unprecedented to go back. These are legitimate debt instruments. And China defaulted. They were the successor country to the Kuomintang. I mean the ROC at the time, and so that's an issue that's still pending. As far as sovereign bonds, you have the Chinese government directly offering dollar-denominated bonds to American and other European investors. And we just have to understand, what does this mean? These bonds are cash. They are for the discretionary use of the Chinese Communist Party, as it alone deems indicated. We used to have so-called liberty bonds in World War I and World War II in the United States that helped us fund the war efforts for the defense of freedom in the world. Well, now we're funding anti-liberty bonds that have a better yield, and therefore they gravitate for a few basis points or a point or two to purchasing Chinese sovereign bonds. I think it's a very bad idea, and it's unwarranted. I mean, what's China going to do with that money? You're going to tell me that that's not going to go for the construction of more sophisticated weapon systems and an expansion of concentration camps, for example? I'm afraid you can't tell me it's not going to happen. Money's fungible, and that's a real concern. So the bond market, I mean, the phase one agreement with the US and China meant that financial companies, institutions in the United States were encouraged to delve into Chinese corporate bonds. But some of those companies are under sanctions, and they're the same concerns on the equity side that afflict the bond market. So it's really the same story, but in this different type of security. And I just say one other thing, that there's something called too big to sanction. The Treasury Department of the Trump administration, which was no favorite of mine, because they were more siding with Wall Street and Beijing on this than they were the American investor community. They noted that the American people have 200 billion or so in Alibaba, about 95 billion in Tencent, 28 billion or so in Baidu. And so they denied, the Pentagon wanted to put them on the Pentagon list, subject to capital market sanctions. And Treasury argued, wait, they're so big, the disruption to the American investor, there could be real losses. Okay. Well, what's it going to be 2 or 3 years from now? In other words, do we have too big to sanction already? I mean, this is the Chinese game plan. 3 years from now, when they have $2-3 trillion outstanding in the United States, we wake up as Americans and 9%, 12%, 17%, 20% of their total portfolios are Chinese securities, if left untreated. Well, what does that mean? Well, of course, you have a vast new scores of millions of people, Americans, in a lobby, in effect, with a financial vested interest to oppose future sanctions against China, to oppose penalties of any kind, for fear that it will damage the value of their retirement funds, their IRAs, their other investment funds. Do not think that China's not aware of this. They're going for numbers. That's why you see that spike in IPOs in the United States. They want us inundated with Chinese securities so that this too big to sanction business turns into not just an across the board phenomena, that the American people are the ones saying, don't penalize them, don't sanction them, for God's sake, because what about me, the investor holding the bag? We can't let that day arrive. That's called being hostage. That's called being owned. That's not a joke. And as far as PSSI is concerned, that's not going to go uncontested on our watch.
Yeah, too big to sanction is not a problem that's going to get better on its own. I think that's a very good thing for everyone to keep in mind in Europe and the United States. Well, the questions are continuing to roll in here, but I'm afraid we are really out of time. So I think that we are going to have to conclude things for the day, but really thank you all for all of these questions. These are all very stimulating. Salami is saying that we need some further sessions, which I'm happy to tell you that we do plan to have at least 2 more lectures on related, not exactly the same, but related topics, economic security and so on, later on this year. We'll certainly be in touch with everybody that's been in attendance here today about those when there's more information available. And I would also like to add that for all of you, but maybe especially for those of you that are leaving here with unanswered questions, I think you might find answers to at least some of them in this report that we are about to issue on the Frankfurt Stock Exchange. And again, we'll forward that to all of you who are in attendance here today. I think that should be a very, very interesting and illuminating document that revolves around these issues, but provides maybe a bit more detail and could help to give you all a little bit better understanding of what exactly we're doing about all of this and about how things stand here in Europe. So I guess the last thing that I would ask you all is just to finish up with those polls. If you've still got the window open, just go ahead and hit submit, please. That'll be a great help to us. And I'd just like to thank everybody once again for joining us here today. I know it's a beautiful day out there in Prague, and you could have been doing something other than sitting here at your computer, but really that means a lot to us that you chose to spend it with us. So Roger,
I'm in and
leave it to you here.
My thanks to all of you. And if there is, as I say, a demand for more illumination on this, if there's something we can do to double back and get into this in a second round, we're amenable to that. So we're looking forward to hearing from you, and we hope we can engage.